G'day legends, I hope that you're having a fantastic day and so far that you are having a fantastic week as well, and the roller coaster of the global markets continues on its peaks and troughs, and it is very interesting to see how some countries are reacting, of course, to then unprecedented tariffs put in place by the US. Now, I'm not going to go over all of that because we need to wait for it to come out in the wash when we're talking about what is happening with China. We will see in the next couple of days what happens there, and does this speed up that de-dollarization that I have warned about for the past couple of years, of course, with these growing then economies in BRICS, and you need to take that purchasing power parity into account. But legends, we're not speaking about that too much today, but we will speak some part of those tariffs and oil price. We hear every couple of months it comes up, if it's not Russia about to have a mass mobilization, it's that the Russian economy is about to collapse at any minute. And if it's not gas, it's oil. And if it's not gas and oil, it is internal Kremlin politics. But we'll go over that today because, of course, we have seen international oil prices plummet. Now, what I have today to share is someone who is very in the know to talk about exactly what has happened and why is this happening. And everything comes down to supply and demand. There's plenty of supply. They actually limit supply to keep the price up to meet the demand. But some countries are going over that. So we'll talk about that. We'll talk about how Russia is going to be affected and how they are being affected here, what we may see the ruble do, what we may see then the Kremlin do to try and bring this back, because it's a lot. Can it maintain that very high military spending? And we also need to look at what the Russian central bank is doing around gold. We'll talk about a few US systems, and of course we'll look at the maps, and the maps is where we are going to begin. So on the screen here, you'll see the capital of Kyiv. Of course, this is Ukraine in the center. We've gone backwards, but we see the red areas occupied since 22 and the purple since 2014. The red check on this map, that is indicating ground that has been made by the Russian forces over the past 24 hours. Now, you will see green check. Now, that doesn't change anything. All that is it's going from blue to green. Remember, this map stays blue for any Ukrainian gain for 2 weeks. So ignore that for today. So let's go into Terney, at least the Terney front line, an area which we have been speaking of, and an area yesterday that Deep State map warned is in a really bad way. And what we can see between Nevsky and basically Nove, that this area has filled in. Now, it is a new update on this map today. I do not believe this is a new update, or else Syriac does have a crystal ball and he's predicting Russian advancements, but he has showed that this has filled in, but he's showing significantly more gains around this area. So let's have a look at what he is sharing today. So zoom in on the map and let's firstly look at this northern sector and try and line up where some of these roads are. So we're looking at this red dot here. This is Kateryniivka. This red dot is Nove, and you can line up where this road is coming. So he's saying this is right out to this road and expanding around this area. Now, we need to then come to the south, and this shows vastly different. So, of course, in here we have Terney, Yampalivkia. The best way is just line up where these waterways are sitting. And what he is showing, that there is a movement all the way down. This red dot, this is this Zarachny down in here, seen by this road, that he is saying, he's suggesting that all of this has come under Russian control. Now, if this is correct, I'm not saying it is, I'm saying this is what Syriac is suggesting, that it's some, say, 6 kilometers further than this map, and let's go here to here, say some 5 kilometers wide. That's a lot of kilometer squares, if that is correct. Let's look at what he says. During the last 48 hours, the Russian army made new advances east and north of Nove, up in this area, deep in the blue at this point in time. As a result, the locality of Kateryniivka was taken, of course, right here, while other advances were made east of this locality in the direction of Novomyalivkia. On the other hand, Russian forces begun 3 days ago attack south of Yampalivkia, take control over the fish farm at the northern outskirts of Torsky, allowing troops to enter the northern part of the locality as well as other positions northeast of it. So into this sector down in here while expanding control in here. So keep an eye on this. Remember, anytime you've got waterways, mountains, anything that is a natural barrier, things can then evolve and slow down very, very quickly. And I do think if Russia is pushing here really hard, they're trying to reach the Oskil, because if they get close to here somewhere, the only way to support up in here is around in this direction. I know a lot of bloggers, they love to talk about crossings over water. Okay, whatever. Don't listen to that. Anyway, if they can even get close here and risk that cutoff, they may be able to collapse this whole front line quickly because it will force a withdrawal. So just keep an eye on this front line for now. Now let's go to the north first. Remember, this is just blue turning green. I'm not ignoring that. It just isn't an actual change on the maps. So let's have a look around then Guaevo in here. So let's firstly look at the map, and we see yesterday to today, we do see a reduction in blue zone around Guaevo, but we also see around Zurikivka that this is now crossing into Sumy and further. Now, there is a lot of Russian pages saying that Basivkia has come under control. It's at least shown in grey zone in this, red zone on many other maps. Ukraine has pushed back and said no, that is not under Russian control. But again, keep an eye out on that. We can't confirm anything until we have, say, a geolocation of that sector. But we are starting to see a lot of geolocations pop up around Guaevo that are saying different to this map, some from a few days ago. Let's open up this Syriac maps. Last 5 days, Russian army managed to capture most of Guaevo, forcing Ukrainian army to withdraw towards the outskirts of the locality. So we'll just zoom in on here. It is indicating this area in here. See this blue in this tree line? This is just in here. It's saying that that has fallen back, and there are some geolocations around this area as well. We'll update you with that as we go. So let's continue our way down the map. And the next place we are going to go is into then Siversk. Let's turn this back on so we get then the red check, and then we'll come in on the Siversk front. Now, an area which you'll be familiar with, but there hasn't been really much movement in here. Of course, an area in here you'll be familiar with is Bilhorivkia and this chalk quarry and this Verkon Nakamenansky in here as well. So we're looking really between these two. This is not the easiest to line up, but on the Syriac maps today, what we need to look at is this reservoir here, which is then this one, and these other smaller reservoirs in here. So about to where my cursor is at the moment, basically in line with this town in here, is saying where the Russian forces have pushed up to, of course, with then the complete occupation of Bilhorivkia and that high chalk quarry part. You can see this is the border line through here as well, so suggesting this is coming under control. The capture of the White Hill and close to control over this strategic position in here, again showing vastly different. I think these maps will show more and more different as then the war then evolves on and the optics around all of this becomes even more and more important. We'll come down Bakhmut, and then of course we have Chasiv Yar, where we do see control heading to the south towards this reservoir here. We of course had the Syriac map talking and suggesting about this movement yesterday or the day before. We'll continue moving our way down. We then see Toretsk. Now, no changes shown on this map today, but if we zoom in on Toretsk, we have then this Syriac map, and he's suggesting just out to the west that there has been movement over the past 5 days and capturing some parts of the 12th district. As always with Toretsk, just take it with a grain of salt at the moment because there's so many unknowns in here with how fluid that front line is. Now, there is a reduction in control around Shevchenko. Now, it's not enough to be blue on this map, but there is suggestion that the Ukrainian forces have pushed back into Shevchenko, and there's a reduction of red in here. It doesn't mean it's held blue, because otherwise it would be blue check, but just a change in then control. And then just to the east of here, of course, we have Lysivkia. So let's open up then the Syriac maps again, and he is suggesting in here that the Russian army took full control over the central part of Lysivkia, while showing that Shevchenko is still under control of the Russian forces. So with all of this, with all maps, we just need to take everything with a grain of salt, consider it, and wait on time, wait for confirmation of geolocations, and of course, then confirmations across many different sources of maps as well. Remember, some maps are months and months behind on some areas. So let's talk about a few critical things. And we have spoken about how much power does the US actually have over a lot of critical systems in Ukraine. And I think many people underestimate this, especially on the ISR front. And I've said before, one of the most important is Starlink. There is no analog for Starlink. Nothing else can replace that. It's completely American owned and run, and a lot of communications and most drones are run off something like this. And of course, we've heard a lot about alternatives, and everyone's saying, well, this will be the replacement. And what we do know is that there is no viable alternative. And this comes from the CEO of Eutelsat, Eva Bernanke. And they've told Politico this is a French satellite operator, saying that they can't yet match Starlink's scale, saying if we were to take over the entire connectivity capacity for Ukraine and all the citizens, we wouldn't be able to do that. Well, let's just be very honest. Their OneWeb network has begun supporting Ukrainian government operations with fewer than 1,000 active terminals. The company aims to scale to 5,000 to 10,000 units, but this remains behind the estimated 50,000 terminals across Ukraine. And this is what I see is one of the major leverages that the US has over Ukraine, and forcing into negotiations if it comes to that. If the US has to go, look, you're not, we're going to start cutting this. We saw that even the threat of reducing that ISR changes almost instantly. And I think Starlink is a massive part of that. If you can't have WhatsApp or Signal or Telegram, comms are massively then reduced, as well as the ability to operate drones on the front line. Speaking of drones, let's talk about naval drones. And this comes from Ukrainian media that Russia mounts successful defense against Ukraine's naval drones. This comes from the Ukrainian Navy commander. In the past, we could easily enter Sevastopol Bay with our drones. Now it's not so simple because the enemy has established a tiered defense system. It starts with a layered detection network with long, medium and short range zones designed to pick up our unmanned systems, followed by a protocol for their destruction. He added that to overcome these defenses, the Ukrainian military must adopt a range of measures, including technical solutions. The commander said Russia is working to develop similar drones and that several instances of their use has already been recorded, saying they are working on it and we are prepared to counter these drones or whatever form of use they might have. Just as with war on land, when this was all new to them, and now we're in a drone war, the same is happening at sea. We're gearing up for it, and we're preparing not only to deploy drones against the enemy, but also to defend against them. Now, these drones, this is something that I've been interested in and talking about for a while. We heard that these were a locally designed, manufactured, produced wonder weapon. Although I have been questioning over time the legitimacy of that claim. And now we've come full circle. It's now clear that these drones being used were a US Western prototype developed initially to defend Taiwan against Chinese Navy vessels. A week ago, we raised concerns about how this may jeopardize their effectiveness, because we know with the experience that Russia has gained for these drones against them, that will very likely be passed on, as it's one of China's closest allies. And China, of course, they'll be incredibly interested in what Russia has developed as countermeasures to these systems. And of course, Russia could be incentivized to hand over some of that information and knowledge also. So let's look at the oil market and what is happening here. And daily we hear that the front line is collapsing, or that the markets are collapsing. Now, an area may be collapsing on the front line, or a area of a market may be collapsing, but are we seeing everything coming down? We need to take a step back and step away from the clickbait headlines. Sadly, the only way to be somewhat successful in this industry is lean into that. Trust me, I hate it probably as much or more than you do, but it is the only way forward. So let's look at this. I've got a couple of graphs to show you, such as this, to just show you at what point where in history we were and similar to where we are now over the past couple of years. So this is of someone who's deeply in the know of this industry. There are two things going on. OPEC Plus, which OPEC doesn't include Russia, but it OPEC Plus does, they're deciding to raise quotas beyond market expectation and fears of Trump's tariffs cratering global economy, thus reducing oil demand. Remember, everything in the economy is boiled down to supply and demand. The May hike is the next increment of a plan agreed by Russia, Saudi, the UAE, Kuwait, Iraq, Algeria, Kazakhstan and Oman to gradually unwind their most recent output cut of 2.2 million barrels per day, which came into effect this month. Now, the timing is odd. Logically, you wouldn't unwind these cuts so much in the face of demand destruction. But I'd say there's three reasons for this. So you're seeing an unwind of these cuts, so more on the market, and also the cratering of economies. So three reasons is that Saudi and Russia, they are wanting to keep Trump happy. 2, the US is going after Venezuelan and Iranian oil sales to bring some under control. 3, OPEC Plus members were cheating on quotas, and the bigger producers need to send a reminder to the smaller producers that they won't accept quota cheating, as they are the ones making the biggest sacrifices in production. The strongest reason is number 3. So this could be temporary based on countries like Iraq and Kazakhstan falling back in line. So they are going over their allotted quota, and we're going to sort of tank you because we're making huge sacrifice for that, and to bring you back into line. Let's continue on this. Now, firstly, I need to remind people that going after Venezuelan exports and Iranian exports is one thing, but Russian production has to keep flowing for this to occur. So what we see is Russia produce over 10 million barrels of oil a day, Iran 4 million, and Venezuela about 950,000. Then we need to look at what do they consume and what is up for export. So Iran, they consume around half of it, Venezuela around half, and then Russia, say around about a third of this. So therefore, the rest is up for export, and that can change then the foreign currency exchange price of this. Say that Iran and Venezuela oil exports do not get exported due to the US going after them. So therefore, you've got less oil on the market, supply and demand. If, say, Iran does not sign a nuclear deal with the US soon, of course not chasing nuclear weapons, the market handling of their 2.4 million barrels per day is one thing. But Russian oil exports are irreplaceable. If you stopped Russian oil, you would be looking at oil prices that were $300 per barrel. Thus, it must flow. You simply can't take 8 or 9 million barrels per day of oil off the market. It would be like the 1970s OPEC crisis all over again, where in a day it went from $3 a barrel to like $12 a barrel. So it times 4 basically in a very short period. That, yes, it's one thing to take this 2.5 million off, of course, from Venezuela and Iran, but if you were then to cut Russia out too, it would have an absolute crisis. So if you're trying to do this, we will see then an increase in price potentially as well. But there's so much uncertainty at the moment, and trying to bring a couple of countries back into line. Now, the Iranian foreign minister has then put this on Twitter, that Iran and the US will meet in Oman on Saturday for indirect high-level talks. It is much an opportunity as it is a test. So we may see significant volatility in the coming weeks. So let's go over this at a little bit more length and what Russia is and what they can do about this. The Kremlin said on Monday that Russia will do everything necessary to insulate the world's second largest crude exporter from a global economic storm. Brent futures went from $1.61 or 2.5% to $63.97 per barrel, and have fallen 15% over 4 trading sessions due to fears about the global economy after US President Donald Trump unveiled sweeping tariffs and a surprise output hike on OPEC+. The plunge in oil prices poses a direct threat to Russia, which is spending a lot of money in its military campaign. Kremlin spokesman Dmitry Peskov has said, "We are closely monitoring the situation, which is currently characterized by extreme turbulence, is tense and emotionally overloaded. Our economic authorities are monitoring this situation very closely and, of course, are doing and will do everything necessary to minimize the consequences of this international economic storm for our economy." The price for Russia's Ural blend of cargoes loading from Primorsk in Luga, Novorossiysk ports fell to around $53 per barrel, below the $69 per barrel average, the price that Russia is basing its budget on. So it's basing its budget for 25 on that the average price will be $69. So it may be 60 sometimes, it may be 80 sometimes, but it's going to be that average to keep up with that amount of money. Oil and natural gas sales account for a third of Russia's federal budget revenues, which are funding a 25% rise in defense spending this year. It was not immediately clear what impact, if any, the oil price fall would have on negotiations about a ceasefire in Ukraine. Of course, there needs to be some push and pull on this. Imports of oil, gas and refined products were exempted from Trump's new tariffs, and everyone is jumping up and down that there's no tariffs placed on Russia, as Trump has said today and has been saying, because there's very little, if any, actual trade being done due to then the sweeping sanctions that have been in place for years. The oil risk for Russia, oil and gas, have been its strength and weakness since the Soviets discovered vast fields in the world's largest hydrocarbon basin in Western Siberia in the decades following World War II. Of course, it's far more of a strength than a weakness to have that in the ground. When prices are high, Siberia's wealth cushions the economy, bolsters state spending. But when prices are low, the economy can hit rocks. It's very dependent on this. Now, lower oil prices due to slowing global demand growth and the strengthening of the ruble may pose risks to the revenue side of the budget. This is what the central bank said on April the 2nd. Now, this can seem a little bit backwards because, the ruble's more strong. Wouldn't that buffer this? It doesn't exactly work like this. This may make it difficult to implement the plan for zero structural primary deficit this year. Russia's 25 oil price assumption in the budget assumes the rate of 96.5 rubles per US dollar. Though the ruble has strengthened this year, the ruble was trading at $86.30 against the dollar in over-the-counter market. So there's assumptions they make about then the budgets around oil price and how the ruble will trade against the USD. According to Reuters calculations, the Russian oil price has declined to around 4,500 rubles per barrel, the lowest since June 23, and down from the 6,700 rubles projected in the federal budget. For the oil market and the world's top two exporters, Saudi and Russia, the intensity of the storm will depend on three different variables: perceptions of global growth due to the trade war, future OPEC decisions, and the possibility of a US military strike on Iran. So we go back into this and we see about OPEC, OPEC plus, Iranian oil sales and future decisions, and of course with Saudi and Russia as the largest then oil exporters. So here is a bit of a TLDR breakdown of this. This is what Russia's budget assumes, that the oil price is going to be a 69 or close enough to 70 USD per barrel. The exchange rate will be about this. So your revenue per barrel will be, just under 7,000 rubles per barrel. The current situation that we have here is that the price has then dropped, and the exchange rate, and the ruble has then increased over time as well, is 86.3 rubles. So the revenue per barrel, you're looking at 4,500. So you can see the downturn on how much profit Russia is actually making, how much revenue is being made per barrel of oil. So you have a total revenue decline per barrel in rubles. This is what was budgeted. That's what the budget is based on, and this is the actual what they're getting at the moment. Of course, this can change very quickly. So, you're having 2,250 rubles less per barrel, or a 33% drop. But people will say, well, the ruble is stronger than it was. It sounds good on paper, but it actually reduces the ruble income per dollar. So due to it being stronger, you're getting less rubles per dollar of course, your barrels per oil sold. So Russia, they're getting hit from both fronts. The oil price is down, ruble up, you're getting less rubles revenue per barrel. The last time it was this bad was early to mid 2023. But that also tells us about the situation that we are in and how bad is it, because we can take what did we see back then and we may see similar now. Now, it is important to look on this foreign exchange rate as well, because, of course, that is your foreign exchange money getting transferred, USD, rubles, wherever else it is sold. So we look back in January 23, the oil price around $50, the then foreign exchange at 76, and the revenue you're looking at 3,800, of course, rubles for a barrel, and the fiscal strain was very high. And then we can see this relieve all the way through 24, where there was some then records even being broken. Now, where we are, we're looking at that 53-ish, whatever around, then we see the rubles per USD at 86, and we can see that the ruble revenue at 4.5 here. So it's seen as high strain, but not to the equivalent of what we saw back in 23. And this can tell us a lot about what did we see back then compared to what now. Of course, some of that spending has gone up. So we're seeing similar-ish strain, a bit less than in times in 2023. But what we have is increased budgets. So what will Russia have to do to then buffer this? So you may actually have to quietly or weaken the ruble. So by doing this, it makes each dollar of oil worth more rubles, therefore boosts local revenue. Because of course, Russia's buying things in Russia in rubles, not in dollars. So if you can then get more rubles per dollar domestically at home, then you've got more money. It sounds backwards, but remember, rubles is used in Russia, not USD. You have budget cuts in lower priority areas, so you save money to protect military and critical spending. So you don't take away that 25% increase, you just reduce it somewhere else. You can tap into reserves from your national wealth fund to cover then gaps, because of course, like we said, this goes up and down. You negotiate with OPEC Plus, of course, Russia is a major player in this, to adjust the quotas that supply and demand and try to balance prices without isolating Russia within the group. It's one of the major exporters. Back to what we see in this is Russian oil still needs to flow, or else you could have an absolute crisis. But we also spoke about then tapping into reserves. And what we have seen over the past years is, to quote then Bloomberg, Russia's embrace of gold eases loss of reserves frozen by war. So this isn't absolute direct, but it's all within the economy. Russia is reaping the benefit of pre-war gold buying spree that's helped offset roughly a third of the frozen assets in its rainy day fund. And remember, you can tap into this rainy day fund when something else is doing poorly, potentially oil, to keep up that military spending. The value of Russia's gold reserves has surged by 72% or 96 billion since the beginning of 2022 from central bank data. The physical amount of gold in the Bank of Russia's coffers hasn't changed significantly over the past 3 years, remaining at about 75 million ounces. Now, the Bank of Russia actively purchased gold in 2014 and 2020 when prices were low. And we can see in 2014 here and then throughout 2020, and you can see then the purchasing of this and the increase in the price in black. Now, the central bank began its splurge in 2014, following then the invasion of Crimea. Between 14 and 20, a time when gold price ranged from about $1,100 to $1,500 per ounce, it increased its reserves of the precious metal by 40 million ounces. Since then, the metal's price has more than doubled, pushing Russia's total international reserves close to a historical high of $650 billion. The Bank of Russia is currently among the top 5 largest holders of gold among central banks, with 229 billion worth in the metal in reserves. But US and allies, of course, with the sweeping sanctions, had, of course, frozen some of the central bank's reserves. So the blocked funds may be in the low, say, $320 billion. Russia held half of its reserves in dollar, euro, pound, sterling assets. Of course, those frozen, but the rest was invested in the yen and gold, which remain accessible for emergency use. So like I suggested, we could see tapping into that if the oil price stays right down. Since the start of the war, the central bank has ceased publishing data on the specific composition of foreign exchange reserves. What Bloomberg Economics says, accumulating a gold pile was a hedge against geopolitical shocks. It worked. The Bank of Russia's approach to gold purchases addressed 3 different goals: diversifying international reserves, assets away from the risk of reserve currency issuing countries, boosting domestic local currency liquidity by exchanging physical gold for rubles, providing a source of stable demand for local gold miners. The increase in the value of gold holdings proves the diversification and hedging value of gold reserves. Gold hit a record of $3,167 an ounce on Thursday before pairing some of its gains as growing concern over the escalating trade and geopolitical tensions. The bullion had just completed its best quarter in decades, delivering a compounded return of 27% since the end of 2022. That's when its bull run began. So we need to look at this. Soaring gold prices offset the central bank's losses in foreign exchange reserves. So the black is in your foreign exchange, your gold is in your purpley pink, and your other in yellow. So it offsets some of this, like their then economics had said that it has worked to buffer some of that. Unless confronted with a severe crisis, the rise in the price of gold is unlikely to spur Russia's central bank to begin selling. So they have that sitting there in their hundreds of billions of dollars to convert into rubles if they need to buffer something. And of course, we haven't seen that dip in yet, but could this lowering in oil prices per barrel potentially cause that, or is it just a short-term movement? Remember, when the ruble's down, everyone's like, this is the time. When it's up, everyone says this is the time. And what we need to do is just look over a long period of time like this and go, well, what did we see back here and what are we seeing right here? Gives us a better idea that it may slow, and that economy has been red hot, so it will slow over time. We are seeing inflation. We will see things hit, but as far as everything falling apart, well, I've been told that since 2022. And at this point in time, with that, there are signs. You can look at the podcast with a doctor of economics below, that things will move up and down, but there still is a lot of money in that system. And again, if you have the product, you're not just dealing in speculation, that oil, like my contact said, that can't just stop, or else there would be a massive crisis. Legends, you have a fantastic day, and I'll speak to you tomorrow. Thank you. Bye-bye.